Good morning and welcome to Trading with Larry. Uh, wish everybody a good morning. I'm here with Eric Shamalov and Thomas Maples, my head analyst behind me. Good morning, all. Tuesday morning, a lot to talk about today. Before we got on, we already had like three arguments, so we're primed and ready for the show. I'm the smiling trader. They like when I smile. There's no smiling in trading, FYI. Okay, trading is a very serious business, and we look to help everybody here get insight into what we're looking at on a macro level, covering probably five or six different markets, and then the equity markets as well. So let's back up to Sunday night off of the downgrade of the U.S. debt, which I've traded through a lot of those in my career, and the result was the same as always. Market, opens down, and it's almost like it gives them an opportunity, or market participants and algos the opportunity to just swipe up the market because it's really not the biggest deal. It is over a longer term period, and I do think it's market impactful. Um, over time. But really, the key takeaway yesterday for me was that the bond market started really, really weak. The 30-year, which you may want to show a chart of, traded above 5% for the first time in a really long time. People got nervous about that. And the 10-year was at 458, 456, nothing crazy. Didn't get up to 475. And then it rejected all of those levels hard in the early afternoon. And all of the markets now, the 30-year is about 498. Not that it matters whether it was 503 or 498, but it's below the 5% level. And, here we sit, and the market is weird. The equity market is weak, not really weak, but a little bit weak, and the bond market is actually slightly bid. So that's where we sit today. See if they test that 5% level, which they probably should on the 30-year, and the 10-year, the 4.5 levels. So those are levels just to watch. But again, yesterday, the S&P was down about 70 when we opened and ended positive for the sixth straight day in a row. So we're up 6 days in a row. Um, Market news is not that great. Again, I'm going to throw it to you after, I finish just with this intro, and you could give us the 17, bull scenarios that are in your head right now. But we we we're down slightly, and I'll touch on all markets, but I want to give you a chance to give your thoughts and what you think for the day moving ahead.
Yeah, good morning, everyone. Yeah, like Larry said, we had a dead downgrade, right? Market kind of gapped down, and as is the usual case, it's a fade the news event. I think that's symptomatic of a market not ready to let go of gains yet. I saw pretty good inflows into both the SPY and the Q yesterday. So they were buying yesterday. So it's going to be interesting to see how long they hold these gains. Overnight, I noticed some comments out of Japan maybe created some weakness. There were some comments on the tariffs. I couldn't really understand whether they were negative or positive, but the futures market kind of sold off a little bit. The Nasdaq hit its 5-day moving average overnight on the Nasdaq futures, bounced right off that level, which is 21,410 right there. That's your 5-day, just bounced right off of that overnight. And look, there's no scheduled economic news this week that I think is going to move the market. So again, I think as as long as we're not, uh, as long as there's no big negative headline, it just doesn't feel like the market is ready to let go. We could kind of fluctuate up and down. I have already both calls and put spreads that I put on around the market last night, and those basically close to zero at this point. So maybe another iron condor kind of day.
Oh, okay. Well, I'm going to take it back here because I had a few questions. Okay. This is one, and I read this yesterday on Bloomberg. Um, Last Monday was one of the biggest retail buying days in the history. I think it was the largest. But here's the question for you. You know, you're saying here, I have a bunch of questions, but you're saying here, you're seeing them buy, you know, at certain levels, or you're seeing them buy and come in. My question to you is, being a trader for 40 years, how are you seeing them buy? I don't understand. If they're buying, someone's selling. So then there's someone selling. Who is them? And what are they buying? And how do you see
That
it?
was just the inflows, the ETF inflows from yesterday. Just track it every day. All the
I get it,
macro.
but if there are ETF inflows, right? And there's got to be people getting out, and there's got to be people, facilitating each one of these trades. So always what I say is, for every buyer there's a seller. So the bottom line is, why would inflows into ETFs, okay, from the retail public get you bullish or get you in a position where you think that's really a good thing? To me, I always listen, I don't rely on that cue as much as I did, when I ran my hedge fund, Banyan years ago. That was one of our greatest, things when people were buying, and especially rolling back to when I was a specialist on the floor. I ran a pit of guys, and there were a couple of hundred guys in my pit, and I was running the call options at the time. I had other great traders that were trading with me at Spear Leads at the time. And if my pit was long, we would take the market and decimate it. So I'm not understanding how, if anyone sees that the retail public is buying ETFs and flows are that way, how that works. It may work for a little bit of time, but it can't work over time. And my thought on the market, with positioning here, is, I think the next time down, which I thought was going to start yesterday and didn't, so maybe it starts today as we're down 20 handles and pretty much gave back the day from yesterday already. Um, I think the next time down is really the time that we're going to pounce on a short and make a lot of money. And I think the reason for that is that I think the reason for that is complacency. There's epic complacency, and I don't want to, I was going to throw this in a little later in the show, but I know you don't like when I talk about great traders and people out there, money managers, and so I'm going to throw a guy out there today. I'm just going to throw a guy out there today, and it's not the guy you're thinking I'm going to throw out there. I'm going to throw out. I actually think you may respect this guy. Okay, I don't know why, but you may respect this guy. But Jamie Dimon, okay, basically said we're at max complacency off the tariffs. Okay. He literally, his comments yesterday were eye opening. Okay. And I would tell you, and listen, he's not always right. He was right. He was right many, many times. Obviously, he's running the largest bank in the world. But he was wrong on Bitcoin. He's been wrong on many things. And I'm not saying he's 100% right, but I'm agreeing with a max level of complacency in the market. And what's happened again, and this has happened since COVID multiple times, where they save the market and no one has to make a move. Back in the day when we were in a bear market for one day. Literally, I don't even think the S&P hit it, but the Nasdaq was in a bear market for a few days. Okay, we ripped off that 35%. Okay, that's that's a good 5 year move on average. Okay. We had a 5 year move in 3 weeks. So it's been epic. Okay. You're thinking, the tariff deals are unbelievable and we did a deal. I think you believe we did a deal with China. I actually think the deal is done. In your mind, I mean, literally yesterday China
Boy,
came out and said the
getting
US already has violated what they said in the meeting. Okay? It's only been 2 weeks. Okay? There's no follow-up meeting. They're not having a meeting. There's nothing going on. The India, your India trade deal, that's coming soon to a theater near you, along with what other deal? The EU, the EU won't even talk to the US. So, on the trade front, the market is ignoring all of this. Trump is back in town, and things are going to get a little bit shaky. And, obviously, we've been bearish in full disclosure for about 3.5% of this up move, which feels like, as a trader, as you know, and people out there that are watching that are traders, that's like a lot of pain. But in the market that we're in, when we get the seed change, which we're going to get, whether it's today or later this week, we're going to get a seed change and we're going to come in 5%, 3 to 5%. I'm fully confident of that.
Mm.
Um, you know, my subscribers and people with me, we're sitting on some losing trades. Probably had about five. We're still in a couple of positions now. Our gold position is starting to work for us. Our short Bitcoin position is not, and our short index position is not. But for the year, like I said, everybody, whether it's my hedge fund that I ran or running, the market newsletter with a subscription service, people are only worried about the last one or two trades. So you can go 11 for 11, 17 for 17, and then go 0 for 3, and you become not a good guy. They have the Larry doll where they're sticking pins in my eye. Okay, so but we're going to end up on the other side of this if we're patient, very well rewarded, and I feel very confident about that. So that's how I sit. I know, the funny thing about you, I look at you and I'm going to throw it back to you because I've been talking too long without giving you a shot. You're the baby bull. And I think, you've been very angry over the last couple of days because I think you've missed the up move, and have been indecisive. And I'm hoping, and I've saved you multiple times over our friendship and work relationship, that you don't freaking buy the dip and get bullish because you will get rinsed. Anyway, I'm going to throw it back to you. I don't know if there's anything you want to
I,
talk about, to get us rolling into the different.
I think you covered everything in that run-on rant right there. But you mentioned complacency, you mentioned the sellers and buyers, but isn't it? You mentioned for every buyer there's a seller, but it works the other way around too. For every seller there's a buyer. So I'm not sure what I'm
Right.
getting
Well,
from.
what you're saying, no, no, I'm not disagreeing with you. What I was saying is that buyers are always met with sellers and sellers are always met with buyers. It's just a matter of pricing, and the price levels are what's key. So, like when you tell me I saw massive inflow, like to me that sets me more negative than positive. Now, maybe that's the old trader in me, and maybe it doesn't work as well. That thing used to work like a charm. I made fortunes of money, especially on the trading floor like that. The market is very different than what it used to be. It used to be more of what I call a poker game. So the poker game was, now it's a cheating game. So I'll explain what I'm talking about in a second. So we've gone from a poker game where, to even sit at the table, you kind of had to be real with real capital, to a cheating game now where basically, so when we used to have the poker game, you would be able to read faces, you would be able to read emotion, you'd be able to really see what was going on. And if you were really good, at playing cards or whatever, you probably were a pretty good trader. because in you could see, you could feel the fever in the market off of being in a trading pit. Okay, now that has completely changed. Everyone's behind the veil of no one. You say ETFs. Everyone was flowing into ETFs. You don't really even know who that is. And when I say now that we're in a cheating game, what happens now is this is a high speed algorithmic market where people, it would take me a long time to really get the ins and outs of this, but people are set up at the co-locate to front run customer orders and uncover flow. So, the big firms have an inherent advantage. And the big irony here is people are trading for free. Like they're running around, paying no commission, at Fidelity or Schwab, which is great, I guess, for the people involved in the market. But their orders are actually being sold to other market makers who we won't name on this podcast, and they're just front running those orders and moving markets around to facilitate the orders. So I think that the game has changed here, and I think the reading of the flows is different than what it used to be. And you have to really respect that and keep that in mind when you're trading. So if you told me, public was buying, they're in massively, I'd want to be sure just off of that because the public is generally not right. But now what's happened is the public has become a huge part of the market. And
Correct.
public can
Exactly.
be,
That's
the
the point I
public
wanted to make. Is you can't look at the public like you as a professional trader. You can't look at the public like, okay, they're getting long. They don't know anything. They don't know why they're buying. Let's go the other way. Even though they may not know anything, they're a much bigger player, and I think
well,
that started to
listen,
COVID.
that leads me to this. Think about this, okay? Yes, they are a bigger player, but in the end, they lose. They lost in GameStop. They lost in AMC. They lost in all of these names. So what it is almost like a hot potato. So like Hello Kitty got into GameStop and AMC, pumped it up, got everyone behind him. Listen, you could pay a ridiculous price for something, but if there's a buyer behind that, you're fine. You just got to hope that the hot potato keeps going. Like remember that game you played? You were probably too
Right,
young to
right.
play it, but musical.
It's hot potato.
Well,
It's
it's
it's hot.
musical chairs. You just got to get a chair before the music stops. So the same thing in this trading with the public. They become, what do they call it? I mean, they call the stocks now meme stocks or whatever, but those are all publicly traded things. And you'll see even to this day, GameStop, which is, listen, I think it's a complete BS thing. It's been holding steady for a while now. It hasn't moved. I mean, it's up and down from 20 to 30. Um, but it's not a company that has earnings. It's not real. It's just when they get the fever going, then they come up with, Hello Kitty sitting in his chair and he puts up like a beer and they buy the stock. I mean, come on. I mean, it's absolutely absurd, you know. And that's the insulting thing about the market. Like really. And I think that insulting thing has transferred from these meme stocks or whatever to the Mag 7. And they rinsed the public earlier in the year in Mag 7. I don't know if they fully sold or even if they did sell, but somebody got rinsed in that. And what they've done, and they've become smart about this, is they've taken their money out of GameStop and moved it into Nvidia. And as you could see, Nvidia is moving the value of Boeing on a daily basis or more. So that's the new meme. These are the new meme stocks. They're just real. So the retail public has gotten smart. They've gotten away from these crazy meme stocks and they've gone more into traditional, what you would call real companies, but the real companies are overvalued. Listen, the same thing happened in Bitcoin. You have, people are talking about Bitcoin every day of the week. Think about what the market cap of Bitcoin is. It's not even the market cap of Bitcoin and every altcoin is the size of Apple. Is the size of Apple. So they can move that around like crazy. It's not really a true asset class, unless you think Apple is an asset class or Nvidia, because it's the same value as those. But somehow this has become an asset class because the retail public has had a love affair with it. And again, I've been in this game a long time. This will not end well. It's not ready to end. They're trying to make it a traditional asset. And what they've done with the invention of ETFs is they have given people a way to get inherent leverage. So we have a product and we trade ETFs, levered ETFs. And the beauty of a levered ETF is, think about this. Let's say you wanted to buy MSTR or micro strategies, right? They have stocks, a couple of ETFs, one is MSTU, that are double that. But you can buy the double and you don't have to use margin. Like, you're getting inherent margin. So they're creating so much volatility here for the marketplace that you know, it's setting up for something really, really bad to take place. I'm not saying it's taking place today by any means. But that's sort of what the public has done. So, general inflows into ETFs, I mean, that doesn't get me, but really looking at, what has gone on in the shift in this is what I'm really looking at. But I want to start touching on some of the markets today, just in general, to get everybody ready for today's trading. So let's touch on the equity markets. I'll let you talk a little bit on that, but as we're coming to you, equities are slightly lower. S&P down 17, Nasdaq a little bit weaker, down 100. So I just want to know. I think I know your thoughts, but I'm just curious to know, especially for today. I mean, you're saying iron condor or um,
Yeah,
that's
I have an iron. I mean, I have an iron condor with with a small naked put position.
oh,
If the
okay.
market.
Well, let me just say this, okay? With the naked put, okay? We don't trade naked puts ever. Never, ever, ever. Okay?
You don't buy puts. I don't know. I don't get it.
Naked. I thought you were short naked puts.
No,
What is
no, I would
naked
never.
put?
I never short.
Well, why, if
Uh,
you're long, you don't call it a naked put.
what do you call it? What do you call? What's the
Well, we
jargon?
call it a long put. A naked put is
Right,
usually a
right,
short put.
right,
Okay, short. A naked put. I mean, I would just say I'm long puts. Naked
right.
put
Okay.
is usually someone being short a naked option. Naked means it's not covered by anything. Kind of like what you look like probably when you're getting dressed. Okay, it's naked. Okay, I never heard anyone say a long put is a naked put. But
Yeah.
naked would mean that you're not hedged. Okay, that's why you're naked. You're caught with your clothes off. So if you're long a put, that's not a naked put. You would just say I'm long a put. So naked puts just brings us to a very good point. Because we have a lot of strategies. You do it as well, where we sell options. Okay, and I want everyone to understand we don't sell naked options. There are people out there suggesting selling naked puts. It's Listen, it works like a charm until it doesn't. And I'll just throw a quick story out there because I think it just popped into my head. And I started in the business 1984. Okay. I'm living in Chicago. Meet a bunch of guys in my building who are in pre med, they're in medical school. Okay. Every month they were selling naked puts. Now the clearing firms wouldn't let you do this, but back then they would. They were selling naked puts to make 1,000 or two every single month because there was only one expiration a month. And give them drinking money. We'd go out, we'd party. They were so happy. And I said to my friend Pete one day, I'm like, Pete, man, selling these things, you're gonna lose like you could lose like 10 grand. If these naked puts go in the money, you don't have any protection. So to make a long story short, the 1987 crash comes. He's short naked puts. And those naked puts went to 800,000, or I think a million two loss. Okay. He was making 1,000 or two a day, 1,000 or two a month, and he lost his parents' money of almost $1 million, except the account. This is what was very interesting. This was what really changed the clearing firms and the risk that the clearing firms were willing to take. When I say clearing firm, like the Charles Schwabs, the Fidelities, they don't really allow like naked put selling. They may on a very small basis, but what ended up happening was the clearing firm, or the broker dealer, sued because the account was deficit $900,000, and the clearing firms actually lost. Okay, and they lost because that was what they called undue risk or unacceptable risk. Like they didn't understand the risk that they were actually taking. So that was the end of that. But really, the point of why I'm telling this story and why we don't do it is we never sell naked puts. Okay, when we're selling puts, they're covered by another put. So we do put spreads. We'll sell a lot of put spreads. That's part of what you like, the iron condor. But we do not sell naked options. And there are a lot of people in the newsletter business that recommend it. It is a real disrespect to the customer base, because you got to realize that our customer base is relying on us, and this isn't their primary business, and they're learning. You never put them in that situation because you could go literally out of business. And even in a down move like we saw a month ago that lasted very short, if you were short puts, touchdown T behind us can tell you, I mean, puts went to hundreds of dollars. Dollar puts went to hundreds. Okay. I mean, you're losing 100 times your money. So we don't do naked puts. So I'm going to throw it back to you. You're saying you're long a put. So what is the position?
What is my position?
Mm-hmm.
All right, we could play.
No,
So
I'm
on the
talking about
cash, I got
what you put out as
tell you the levels exactly. And you know what? I could put on a chart also of the SPX. I like to
Well,
do
here's
SPX.
my question before you get into that. If the S&P moves 50 points today, do you lose money?
No,
Okay, so then you're not taking in a lot of money to put this spread on. You're far from the money.
no.
Well, what is
I'm
this?
far from the
Dude,
iron
you
condor.
have me guessing. Just tell me what's the strikes that you're putting on today,
Well,
or
I'm
you
not
put
going to
on.
say that. I'm going to show it on the chart for the people, since you want to go there.
I don't really want to. That's what you're saying, and I'd like everyone to understand, what we're recommending people do.
All right. So, so I mean, I don't recommend they put it on now. It's too late. But I have a 6,005 by 6,010 call spread on the
Okay.
put side.
Okay.
On
So
the
what
put
did you get
side, I
for that?
got
What did you get for that? 50 cents? A dollar?
last night. No, last night I got $1 on that. 58.95 on the put side, like this, right? And then I have an in the money put spread at 59.30. In the money call spread 59.30 by 40, like this. So that's my
What did you
position.
get for
So the
that?
iron condor
I understand, but what
is
did you
for
get
the
for the
in the
call
money
spread?
call spread. What up here? So the 6,005.
No. What did you get for the call spread that's in the money? What did you get for that?
Oh,
950?
I sold that.
8?
I sold that for 750.
Yeah, I don't like that trade.
750. So I'm
I
risking
don't.
50 on that, and that's financed
You're
by
gonna
the
lose.
iron
You're gonna
condor.
lose 25% of the value of the spread as long as the index stays above 40 today, right? No,
What was that?
you're going to lose
I didn't hear
25%.
what you said.
I'm saying it right again. Okay. You're going to lose. You sold a 30-40 call spread. Okay. Is this in futures?
No, this is cash.
Oh, okay. I don't even know where that cash is right now. So I won't really break it down, but
But you
the bottom,
trade the cash for your clients every day.
I traded the S&P
You trade
E-mini
RPX, right?
futures. I trade S&P E-mini
But
futures.
for your product,
But I
you
also
don't
trade
trade
the
the
I also trade the SPX. Um, so I am
right,
trading the cash,
right.
but it's hard to determine where the cash is when it's not open. It's $15 lower. Actually, it's probably lower than $15 because the future sold off at the end of the day. So the cash should open down about 18. But pre-market opening, I want to really look at this in futures because it's the only thing that's trading, actively. Um, so I don't know. What did you put this on in? SPX, SPY, what?
SPX. No,
SPX.
SPX.
Yeah, but
Last night, yeah.
you're trading it overnight. It's so illiquid. I don't understand why, how
It's
you
not
can.
illegal. Got filled very easily overnight.
I don't know. It's not, they just
I'm
started
actually
trading that.
thinking. I'm
They just
actually
started
thinking of just
trading that. But
buying Condor and
let's do this. Let's do this. So really what you're doing is you're taking in very, very small chips. When I say chips, I'm saying money. You're taking in small money. You're protected. I don't think you're protected. I mean, I'm bearish, so I think you should be all right, but I don't think you're protected all that great. Um, on the upside potentially if we have a fit. Listen, you're taking in $2
yeah.
and you're hoping
I'm betting we're not going to go up to 6,005 on the cash. I don't think we're going to hit 6,000 S&P 500 today. And
Mhm.
at the same time, I don't think we're going to trade below 5,900 either. But um, on on a down leg, I could make a lot on the in the money call spread and just leave the iron condor out. So that's kind of my plan for today.
Yeah, I mean, listen, is a lot of moving parts to manage, but the way I look at it is you have capped risk on the call spread. You can only lose $2.50, but that's 25%. And then on the downside, you're pretty protected, $50 either way. Listen, the spread probably should work out. But you got to remember, and I want people to understand this, we're now at an 18 volatility. I don't believe the market is worth selling big at an 18 volatility. I mean, we've been doing it. It hasn't worked to our advantage. Yesterday, we sold the call spread. We were fine until the very end of the day. Then it went in the money, and we lost, relatively small. I think we lost about $4.50. But I feel like, in full disclosure, this strategy, this isn't the greatest time for this strategy. So we're hanging in the game. We're down very small. We expect to be up, and we stick with the strategy. It's tried and true, but it's been very, very choppy in general. So we know at the end of the year we're going to be good. You've been with me, actually, I think it was maybe 2000. I don't remember if it was 20 or 21 or whatever. We were down a lot going into the fourth quarter of the year with this spread strategy.
That was
We,
20. Yeah, that was 2021, and
and
then
then,
that quarter was
I
actually
mean,
that fourth quarter set off such a great trading. That's how me and you started trading together. It was great.
thank God I met you, dude. It would have been really bad if if I didn't have you. I'm gonna owe the entire product opportunistic trader to you. You've told me this many, many times. You've saved me. So I'm
I
gonna I'm gonna throw it
don't
out
know.
there. Meeting you saved me, okay?
The only thing I could really save you from is just being overly bearish and just sticking with it and
Okay.
sticking with it and
And
sticking.
and
And momentum
I'm
takes
not
over.
picking.
And
You
you
know what's
blame the
funny?
retail, and you'll blame
You
this.
know what's funny?
You know, and
This is what
sometimes
I
you
would.
gotta just step out of the way. Just step out of the way.
I think that I am stepped out of the way. Okay. I think, if you want to go back to March, where, February, March, April, we probably had one of the greatest trading runs that I've had in my career, which is 40 years, where we've just had 20 winners in a row, whatever. I was actually bullish on the bottom and we were long. We caught that. But as a trader, I don't stay for 30%. I don't expect the third, like what we've seen here, I think is
Yeah, because you
once
look
in a
for a trend
generation
within a
type.
trend. You look for a trend within a trend. So I think in
So,
at the
so I
bottom you're
think the
looking
trend,
for
believe it or
reversion.
not, I think the trend is still bearish. So I know you're bullish and you think tariff deals are done all over the place. And, you know,
I don't know why you say that. I don't think
Well,
that. I think
listen,
that there's a chance.
timeout,
I
timeout,
think there's.
timeout. I just got to call it timeout. Okay,
Oh,
just hear this. Okay, and other people are saying this, and I'm not naming names on this podcast because you get really upset when I name names of very
I,
talented individuals that have made billion plus. Okay, so here's what I would say. Okay, let's roll back the clock, okay, to pre-tariff, when they didn't really know what Trump was going to do. So Scott Bessent comes in, becomes the Secretary of the Treasury, okay? He's now the Secretary of the Treasury. He comes in and literally is talking about a financial crisis as the stock market is making an all-time high. He keeps saying we're in a financial crisis. We got to avert this financial crisis. They know what is going on. They know the debt is unsustainable. They know things are really bad. So now let's roll it forward a little. Now all of a sudden these tariffs start hitting and he's raising tariffs all over. And minimum tariff right now, minimum to anyone in the world is 10%. Tariffs are up 50% to other countries because China's paying above 50 right now because they have 25 plus another 30. There are other countries in the same boat. They're tariffing European autos 25%, which is unsustainable. Okay. So, how in the world is the market 250 S&P points higher than it was before tariffs ever existed? And Scott Bessent said we were in a financial crisis. So that's how I perceive the market. And you're seeing tariff deals, this, that. There are no deals. There are no deals. We cannot make deals. Okay. We aren't going to make what you would call fake deals. There are no deals. We need the money to pay down the debt. And Trump knows this. So, if the market gets a little shaky, they'll say they're meeting, the EU, and then the market will maybe stabilize. But there are no true trade deals that are
okay,
operating.
but what you're first of all, I'm not bullish. I think
I'm not saying
what
you're
I am,
bullish
what
on the
I am, hold on,
scenario.
what I am is, I honestly, I think that the upcoming trade deals can go either way. I know you don't think so,
I don't think
but I
there are
think
trade deals. Let's be very specific. I don't think there are going to be trade deals. Okay. I think there are going to be what the UK did. Okay. Which none of these other countries. Let me ask you, do you see anyone rushing to the White House? I'm just asking your opinion. Do you see anyone rushing to the White House? He could have these deals
no.
done
The answer is no. But everything you're saying, the market, it's not like it's not something that is an unknown. Everybody knows this, and yet the market has gone up anyway. Why do you think that is?
because the people are short the market. Okay, people are positioned in the wrong way, and they're trying to squeeze out the last bit of the orange. It's sitting on top of that blender, and they're pressing down, and they're gonna jam everybody out. And literally, people have gone the other way, and there are no inherent sellers of the market right now. Okay, no retail customer is
Okay, there's
making
no
it.
inherent sellers. Why not? Because they're looking for more, correct?
No, not at all. Of
No.
course, they're always looking for more. I mean, they're greedy and they're retail. Okay, but
So the
let me
reason
ask
the
you this:
market is
time
going
out.
up, in my view, is there. I think the market is trying to look past. all of this negativity, all of this wall of worry. And I think that they're looking
Oh my God.
for the growth scenario. This is what they're
Dude,
doing, whether
dude,
they're right or not is a
dude,
different
I
question.
can't stop you
But we
from
have to be
talking, so I'm
cognizant
going to
of what
stop.
they're
I'm calling
doing
the timeout.
in order to
Okay.
get out of the way, in order not to have the max losses on the
Eric,
credit spreads and
Eric,
all
just
that.
just time out. Let me ask you this. This whole thing is a month old. Total of a month. Okay? It literally is a little over a month old. Okay? I mean, this is the story. What is this? Like the Old Testament? The story's been written? Story hasn't been written. Okay?
It
They
hasn't, right?
okay, not even close. Okay? Not even
You're
close.
giving it absolutely no chance of turning out in a positive way, which is something I don't agree with. I mean, you're
Okay.
giving it zero
Okay.
chance.
Okay. But the market is already 200 spoo points higher than where it was
You're a
before.
trader. You
So
can't price in 100% probability of all of this turning out bad.
listen, this
You're
is
giving it a
this,
100% probability.
listen. We're running late in the podcast. It's been fun. Okay, I we got to talk a little bit more about markets and close it up because we'll come back tomorrow for everyone out there. But we're not going to get anywhere on this today. The bottom line is you're saying it's going to turn out positive. It may or it may not. It's way
Right.
way too
May or
early.
may not. That's what it
Right.
is.
But the market went from grossly oversold on a negative that the world was coming to an end less than 3 weeks ago to in 3 weeks pricing in better than perfection. Okay.
Yes, that is also true.
And
That
they
is also
haven't done one deal. And they haven't done one full deal. Okay.
so. It's reasonable to expect a 5% pullback just based on technicals.
I don't know when
That's
it's coming. I'm expecting more
I
of a
think
pull.
it's reasonable, but to completely throw out the possibility of all this turning out in a positive way, I
I
think is
think
also a
I think it's priced in the market. I think a full positive is more than priced in the market. I think if they sign 5 trade deals right now, we're not going higher. Okay. We're already at an all-time high. We're within 2% of an all-time high. Okay. 2.5. Okay.
pretty
I
incredible.
don't understand what's so positive. Dude, do you understand they were talking yesterday? 35 to 40% of container ships are coming over empty. Empty. How is that a bullish thing?
It's
I'm just
not,
trying to understand.
but
Okay,
maybe the
so
market looks at that as it's in the rear view.
well, they're not going to fill them up. They're never coming back. Do you understand? They're with tariffs, they're never coming back. Never. Whether those tariffs are 10% or 40%. Listen, I was in a manufacturing business. Okay. We made sneakers and we made them in China. Do you know what our margins were? With the whole sneaker, it wasn't even 10%. We couldn't take a price increase of 10% or 20% to make our goods. I mean,
By the
they're
way,
pricing
sneakers are
everything out of the
becoming
market and it's not coming back. But I just, want to get close to wrapping here. So, you're looking at a way out of the money call spread and a way out of the money put spread, taking in a couple of bucks. And then on top of that, you're somehow short and at the money or slightly in the money call spread. I'm not going to do that trade. I'm looking to wait for the market to rally a little and try to sell a call spread. Will not touch a put spread. Markets around the world have been quiet this morning. Bond yields, again, are touching 450. Okay. That's critical. This morning they were 444. They're back to 450 and they're going to go higher. Um, that's what I believe. And I think that's going to set off the next wave. And I think that the debt is a major issue here. Okay. Oil, same stuff.
yeah,
No trade. It's creeping up. It's still at about 62.80. Not a lot going on there. Gold,
natural gas. Natural gas looks interesting.
it's crashing. But I don't know. You like the $3 level. I don't trade gas till it gets to be a teenager. I'll wait for it to get to 13 back when I used to trade it, but it's not really a lot going on there. Gold has been, like I said yesterday, we're long it. It's been utterly disappointing. It's a chop fest, not looking like it wants to break out. I'm hoping it gets to 3,300 so we could sell it, but it's 68 points away. And overall, I think we've covered everything. The news is light. Look for headlines. Again, we're seeing very negative comments from some of the smartest people in the world. It makes me a little bit leery. Obviously, the market is climbing the fake wall of worry because the market's never really worried much. Um, Listen, here's my question. Palantir went from 125 to 70, okay? And no one sold a share. And now it's like 123, 124, 5, whatever. No one's going to sell, Eric. They're not going to sell. They already took the
Oh,
2 weeks of
in
fees.
fact, you're looking to buy more, which is the crazy thing.
But
Yeah, market positioning is definitely problematic at these levels. You were mentioning ETF flows. I don't think you gave me a chance to explain how I look at it, but the fact that they bought that they had inflows yesterday into all these ETFs tells me there's a level of retail buying, and it makes current levels much more important. Where if these levels are rejected, like you said earlier, it could be kind of like a fast pullback, big one and fast. So all it does to me is just give me a weight on the current level. Is this level important or not? The fact that they were buying yesterday makes yesterday's levels, all those levels like that 5908 that I mentioned, even more important for me for my trading. So that's the way I
okay,
look at it. And certainly the market is overpositioned. You mentioned Palantir. Now it's at 125. I got people calling me and like, how do I buy more? I want to buy more. All right. So they're trying to buy the high. This is what I'm noticing. There's a lot of FOMO out there. I think it's crept even into the institutional space. And people feel like they're missing the boat, and they're trying to pile in at the highs here.
yeah. I mean, we have to keep an eye on the markets, and we'll see how things shake out. Markets getting very close to the opening. I'm having a lot of fun today with you. We're running late. I want everyone to get ready. There's about 13 minutes to the opening. Again, keep an eye on the bond market. Critical level here, 450. If we trade up from here, listen, I believe, I'm going to leave it like this. I believe there's a very big slowdown that's going to hit the market. It's going to hit it big, it's going to hit it fast, and it's going to be very surprising to people. And I think you're seeing it in the fact that, everything coming into the United States has stopped. And all of these countries are developing trading relationships around the world outside the US. And I believe we're isolating ourselves, and it may come back to haunt us. And I think Trump is back in town. Is he's not it's not a lot for him to talk about. Um, so maybe keep an eye on him getting a little bit aggressive. But tariffs are here to stay. I know you think there's going to be trade deals. Uh, I think whatever the deals are, they're going to be willing to pay, and that's my thought for the day. I do think the market is topping here. Again, it's proving to fight the wall of worry. Maybe we get above 6,000 on this move. I'm not sure. But we're lightly short and we're going to remain that way. So, that's sort of it for the day. I hope we got everybody some good insight and thoughts on positions for the day. And I'll leave it to you to close us up.
Thank you, Larry. So I mentioned natural gas earlier, and I think yesterday I also mentioned that I've been noticing a very bearish rotation in the market. The market has been buying low volatility stocks, and I was just looking through it, and I think natural gas here is a good level, and there's a stock in the low volatility segment that I like, ticker NI. Uh, Natural gas and electricity producer on the East Coast. Looks like it might want to break out. So I'm going to be looking at ticker NI, NiSource, and I'm looking at natural gas today.
All right. Well, I appreciate it. I'm glad that we have the ability to join everybody. Hopefully, you guys tell some friends about what we're doing here. I think it's very valuable to people out there that want to get insight into the trading day and what we're looking at. So I hope everybody joins with us tomorrow, and we'll go over today and the future. I wish everybody a great trading day and enjoy. Peace.